Appraisal of loans and advances. Though making loans and advances has been an integral function of commercial banks for a long time, on July 1, 2009, RBI issued a circular providing a framework of the rules or regulations or instructions issued to scheduled commercial banks on statutory and other restrictions on loans and advances. According to this circular, banks could implement these instructions and adopt adequate safeguards in order to ensure that the banking activities undertaken by them are run on sound, prudent, and profitable lines. But time to time in the past, RBI constituted many committees to review the system of cash credit. This lesson covers the policies and issues related to the appraisal of loans and advances. It follows from the previous slide that after studying this lesson, you should be able to know the different types of advances, understand the recommendation of different committees, calculate the maximum permissible bank finance, define letter of credit. Banks have laid down detailed guidelines to be followed while considering credit proposals. The appraisal of term loan broadly involves an analytical assessment of the purpose, cost of project and how it is to be tied up, future trends of production and sales, estimates of costs, expenses, earning and profitability, cash flow statements during the period of the loan. For this purpose, 4 fundamentals should be carefully studied and analyzed, namely, technical feasibility of the project, economic viability of the project, financial viability of the project, managerial competence. Working capital is defined as the total amount of funds required for day-to-day operation of a unit. It is often classified as gross working capital and net working capital. Gross working capital refers to the fund required for financing total current assets of a business unit. Net working capital, on the other hand, is the difference between the current assets and current liabilities, which is nothing but surplus of long-term sources over long-term uses. A positive net working capital is always desirable because of the fact that it provides margin for the working capital requirement. Like many other activities of the banks, method and quantum of short-term finance that can be granted to a corporate was mandated by the Reserve Bank of India till 1994. This control was exercised on the lines suggested by the recommendations of a study group headed by Sri Prakash Tandon. Norms for 15 major industries proposed by the committee now have more than 50 disintegrated industry groups. Normally, the borrower would not be allowed deviations from norms except in case of bunched receipt of raw material, power cuts, strikes, transport delays, accumulation of finished goods due to non-availability of shipping space for exports, build-up of finished good stocks due to failure on the part of purchasers. The committee suggested 3 methods of lending out, of which RBI accepted 2 methods of implementation. According to the first method, the borrower can be allowed maximum bank finance up to 75% of the working capital gap. Working capital gap denotes difference between total current assets required and amount of finance available in the shape of current liabilities other than short-term bank borrowings. The balance 25% to be brought by the borrowers as surplus of long-term funds over the long-term outlay. As per second method of lending, the contribution of the borrower has to be 25% of the total current assets built up instead of working capital gap. Other major recommendations of the committee included no slip back in current ratio normally, classification guidelines for current assets and current liabilities, identification of excess borrowing, information system which was modified by core committee recommendations, bifurcation of limits into loan and demand component. The main observations of core committee were related to mismatch of demand and availability of bank credit during peak and non-peak periods of activity. The committee suggested that the limits should be sanctioned separately to take care of both the situations wherever the operations were thought to be of cyclic nature. Annual review of all limits was also suggested. With fixation of two types of limits, the need for bifurcation of limits was not felt, and this recommendation of Tandon Committee was abandoned. The committee also sought to make the bank credit more disciplined by prescribing a definite treatment to requests for ad hoc limits. Second method of lending suggested by Tandon Committee and information system was made compulsory for working capital limits above Rs 50 lakhs. Considering the contribution of the SSI sector to the overall industrial production, exports and employment, and also recognizing the need to give fillip to this sector, a special package of measures was devised by RBI during April 1993 to ensure adequate and timely credit to this sector. While doing so, the recommendations of the PR Nayak Committee was taken into account. Examination of bank finance profile of working capital to the small-scale sector by the committee has revealed that this sector as a whole received a level of working capital which is only 8.1% of its output. The RBI has more or less endorsed the Kannan Committee recommendations in conveying total freedom of banks in the area of credit management applicable to big corporates. It has not, however, given a specific time frame for the changeover but left it to the discretion of banks. RBI has also conveyed certain guidelines to banks in 1997 after compulsiveness of MPBF calculation by Tandon Committee stood withdrawn. According to the latest guidelines, working capital credit may henceforth be determined by banks according to their perception of the borrower and the credit needs. Accordingly, an appropriate system may be evolved by banks for assessing the working capital needs of borrowers within the prudential guidelines and exposure norms already prescribed. Banks should lay down through their boards transparent policy and guidelines for credit dispensation in respect to each broad category of economic activity. There should also be no objection to the individual banks retaining the concept of the present maximum permissible bank finance with necessary modifications or any other system. Banks may follow cash budget system for assessing the working capital finance in respect of large borrowers, since major corporates have adopted cash budget. An important criteria for judging the soundness of a banking institution is the size and the character, not only of its assets portfolio but also of its contingent liability commitments such as letter of credit, guarantees, and co-acceptance of bills. Letters of credit accomplish their purpose by substituting the credit of the bank for that of the customer for the purpose of facilitating trade. Banks are required to consider specified precautions at the time of opening of a letter of credit, at the time of receipt of letter of credit, and on receipt of documents under letter of credit. Guarantee is a contract to perform the promise or discharge the liability of a third person in case of his default. The guarantees are structured according to the terms of agreement, viz., security, maturity, and purpose. With the introduction of risk weights for both on-balance sheet and off-balance sheet exposures, the banks have become more risk sensitive, resulting in structuring of their business exposures in a more prudent manner. The banks discounting such bills co-accepted by other banks should also ensure that the bills are not accommodation bills and that the co-accepting bank has the capacity to redeem the obligation in case of need. Now let us check if we have understood the various concepts discussed in this lesson clearly. Letter of credit is a contract to perform the promise or discharge the liability of a third person in case of his default. Right or wrong? Wrong. It is guarantee. Guarantee is the total amount of funds required for day-to-day operation of a unit. Right or wrong? Wrong. Working capital gap denotes difference between total current assets required and amount of finance available in shape of current. Right or wrong? Right. Before we end, let us briefly revise what we have studied till so far. Efficient management of loans and advances portfolio has assumed greater significance as it is the largest asset of the bank, having direct impact on its profitability. In the wake of the continued tightening of norms of income recognition, asset classification and provisioning, increased competition and emergence of new types of risks in the financial sector, it has become imperative that the credit functions are strengthened. RBI has also been emphasizing banks to evolve suitable guidelines for effective management and control of credit risks. For sanctioning of funds, RBI is using the guidelines suggested by different committees. RBI has laid down certain guidelines for sanctioning of fund-based and non-fund-based limits. Banks have to follow these guidelines while sanctioning of funds.